This session will highlight the need for gender-intentional product design, expanding digital and financial literacy, strengthening community-based delivery models, and leveraging community groups such as self-help groups and women's collectives as catalysts for empowerment. I'll once again request members of the audience who are still sitting in the extreme left and the extreme right flanks to please join us front and center. The anchor for this fireside chat is Ms. Maya Vengurlikar, Chief Operating Officer, CRISIL Foundation. I request her to please join us on stage. May I request for a round of applause, please? A warm welcome to you, ma'am. It gives me great pleasure to welcome on stage our esteemed speakers. Please put your hands together as we get ready to welcome Ms. Smita Premchandar and Ms. Lauren Hendricks, President and Chief Executive Officer, TrickleUp. Ms. Smita Premchandar, of course, needs no introduction to the August gathering. She's also one of our esteemed authors on the report, which was released this morning. A very good afternoon and a very warm welcome to all three of you. I now hand over the charge of the session to the anchor, Ms. Maya. It's over to you.
Hi, good afternoon, everyone. And it's a pleasure to welcome you all, though we see a very, very scant audience in the room. But hopefully, as we progress, there should be few people joining us. Excited about this fireside chat on gender-responsive finance. What we will try to do in next 30 minutes is try and frame our discussion around whether access really leads to empowerment of women. And that's what we'll explore. So just to talk about access, since morning we heard many speakers here talk about how much progress we as a country have made, and indeed not just in India, but Lauren, I'm sure similar experience also points to countries in South Asia as well as Africa as well, that over the last decade, significant progress has been made in terms of expanding access. In India alone, we have seen that more than 75% of women own a bank account, which is a significant milestone to achieve. Yeah? And from a policy-making standpoint, this is really a big success. However, from a practitioner standpoint, all three of us, when we were chatting before this session, I mean, we agreed that this is just a starting point, for when it comes to the journey of women from financial inclusion to empowerment in real sense. When we really look beyond access, and when we start really looking at how women really engage with financial services, we realize that the picture is more uneven. It looks more uneven. Many speakers we heard since morning, a lot of data and numbers were given to emphasize and underscore the point that women tend to lag men when it comes to regular account usage, when it comes to digital payments, and also for that matter, access to formal credit, and particularly when it comes to enterprise and asset ownership. Yeah? So there is something more definitely that we need to do. So Lauren, I'll turn to you to really understand from your perspective and all the work that you have done in CARE and now TrickleUp. How would you really look at understanding this access itself? Do you really feel that giving access to account ownership or having bank accounts and having access to finance bank accounts really is enough for women to start their journey of financial empowerment.
Wonderful. How's that? Thanks, everyone. Thanks, Maya. I appreciate it, and I really very much appreciate being invited to participate in this panel. It's obviously an issue that's close to my heart and all of our hearts. You know, I think we were talking earlier, we said India has made such progress on making sure that everyone across the country, including women, has that kind of minimum level of access to a bank account. But that is not financial inclusion. Financial inclusion is having access to the financial products and services you need when you need them and being able to use them. And I think on that front, there's still quite a bit of a way to go. And we see that when we look at how active women are in using the financial products. And one of the things we were discussing is that sometimes there's a conversation about creating products specifically for women. And how do we create gender-based products, and does that involve lowering standards? But really what the issue is women would use financial products if they fit their needs, right? And so sometimes we view that the reason women don't use financial products or the products we offer them is their fault, right? Or if we just educated them more, if they were more financially literate. But the problem is the products don't serve their needs. And what we need is to really fundamentally understand how women use money and how they use finances and develop products that meet their needs. Women often, for example, are in charge of household finances. So they make small, frequent, regular payments, right? And so they need financial services that meet that, whereas men are more likely to make larger asset purchases for the house or for a business. And so products are often designed around men's need for a large lump sum of credit to buy an asset and then pay that off over time, whereas women's finance and credit needs may be more around the need for small incremental amounts of credit that they can draw down and repay frequently, something more like an overdraft account. So really what needs better use is understanding women's financial behaviors and then designing products and services around the way that women manage finance. I talked about kind of a household example, but it's the same in business. Women often have different types of enterprise activities because of their household obligations, because of their mobility limitations, and often financial products have been designed around the type of economic activities that men are engaged in. What we need is to better understand the types of economic activities women engage in and design products that fit their needs.
Thank you, Lauren. I think some great points around designing gender-sensitive products. So Smita, I would like to ask you, given all the work that you have done in gender space, what is, in your opinion, that single most important barrier that holds women back from fully participating in financial services? And I have often read and heard people say that women enjoy a very different relationship with money. Yeah. So something, from your experience, we would like to really understand what is it that really makes it so uncomfortable when it comes to dealing with money and dealing with finances.
Thank you. You remind me of my PhD topic and the book that I wrote, which talks about multiple meanings of money and how women see finance as very different from how men see finance. Because we actually introduced, when we introduced SHGs 30 plus years ago, we introduced a completely new form of money. It was collective money. Women didn't even manage their own funds when they were asked to manage collective funds, right? So far in 30 years, we have proven that we manage that well. Okay, rural women have proved that they can do very well with collective finances. But now, if they have to move from SHG finance to individual lending, there's a huge chasm because a lot of the businesses which are in the 1 to 5 lakh range, and I talk as an independent board member of a company called Seeds, which is an NBFC, we find that only 17% of their portfolio is women. Because even if they want to go and look at financing women, they find that women are working, let's say if it's a trading thing or a shop or something, women are able to give 10, 20, 30, 40% of their time. Men are sitting in that place for 50 to 60% of the time. Even if they want to recognize women as entrepreneurs, never mind the percentage of time, the documents are not in women's names, the assets are not in women's names. So you're looking at structural inequality in the society, which of course reflects on the financial transactions. So unless and until we go beyond finance, the 9-square, 9-point puzzle, you can't solve it without going out of the 9 squares. And you actually have to step out of finance into social structures, into gender dynamics, which don't allow, India is one thing, but if you go to Bangladesh, and in BRAC, in Bangladesh, they were trying to do gender transformative microfinance because BRAC was the first organization to realize that as money increases as loan sizes increase, more and more male management of that money increases, right? So they were looking at gender transformative microfinance, and I was leading that discussion and that analysis. And we found that in the markets, if a woman is sitting in the market, it is, especially in that culture, it is below dignity for a woman to sit in a market, shops full of trading goods where mostly the men are sitting, right? So for women, you have to create different things. You have to create a whole street or a market or something else that opens up the women's mobility, women's visibility as entrepreneurs without threatening the culture. So these are some of the things that are really important, I would say. And for women, it's not money alone. Social acceptance has to go with it. They have to be.
Yeah, I mean, this is an important aspect, Smita, that financial inclusion and financial participation of women goes beyond policy, product design, and it is as much an outcome of social norms. But coming back to access, for a moment, what we have seen, particularly last decade, all the progress which we made in access, majority of that was led by digital, improving digital access. And what we have seen as from my experience also on the field, as well as we heard in the morning today, that when it comes to digital transactions, women again are being significantly left behind. They are lagging behind. So Lauren, I would like to ask you, do you really see this whole digital transformation, while it brings a lot of benefits in terms of access and reduced costs, etc., does it really help progressing women's financial inclusion, or is there a risk of women being left behind?
Yeah, thanks so much for asking. The reason I keep looking down at my phone is because I took a picture of one of the slides that keeps coming up. It's kind of the end slide, and it says, digital finance stands at the center of India's inclusion strategy. So digital is squarely in the center of the plans for increasing economic inclusion and financial inclusion for women. At the same time, India is one of the countries with the largest mobile gender gap in the world. So I wrote the numbers down here real quick. Women are 16% less likely to own any type of phone, 33% less likely than men to use the mobile internet, and 39% less likely to own a smartphone. So simple, we were talking about access. Simple access to mobile devices and ownership of a mobile device is becoming a huge barrier as more and more services, financial services, government services, go online. And even when women own devices, they may not have control over those devices. You know, male spouses may insist that women don't have a PIN or a passcode on their phone so that they can access them, fearful of what women are doing outside of men's supervision on a digital device. And so increasing women's access to and ability to manage their digital lives and digital financial services is really critically important. And I think that there's several ways India could think about doing that. I'm happy to talk more about that, but I just really wanted to highlight that digital financial inclusion, the digital is as much of a barrier as the financial is.
Absolutely. And you know, one question I would like to ask you both is, while ownership is definitely important, you know, owning a digital device, but there is also fear about engaging with digital transactions. So I have seen in my own experience that even those women who own a device and who have access to digital banking, they tend to hold themselves back, and there is fear of fraud. You know, there is overall, I see that, you know, the underconfidence when it comes to engaging with digital financial transactions. So, you know, how can we help women overcome that? And, you know, have you seen any models which have succeeded in doing that? And particularly, Lauren, I would like you to talk about women agents, women digital agents. So does that really work? Has that model really worked? And later on, Smita, I would also like to hear your views on this.
Yeah, thanks so much. I think digital financial service agents based in communities is a real game changer in terms of increasing women's access to digital financial services. And there's really good evidence of this across the globe. Women prefer to get financial advice from other women. They prefer to go to other women when they have challenges and ask for solutions. I mean, this is intuitive and we all know it. We at Trickle Up run a program called Smart Sakis, funded by Tata Communications. And that takes a coach that's based in a community, and that coach is a Smart Saki. It's a digital coach. Women who are in our programs receive smartphones as part of their graduation package, and they have that Smart Saki, a woman in their community who can teach them how to use the phone, answer any questions that they have, help connect them to government services for payments. There's another group here in India called PLENARY, and they have a program called Digital Naris, which is a digital touch point based in a community that even if you're a woman who doesn't have your own smartphone, this is a woman who you can go to who can help you make transactions. So I think having a female, you know, a woman digital touch point in your community who can not only help you transact, but also help you learn how to transact on your own is really so important. And this also corresponds to much of the research around financial literacy, which is that financial literacy that's, you know, training based is really ineffective. Financial literacy that's right now on demand, I have a problem, I need to solve it, you're here to teach me how to do that, is really incredibly effective. So having a woman in your community who can help you do that on demand in real time is really critically important. So I think really scaling up female digital touch points in communities is really going to help scale digital financial access.
Smita, would you agree that women-led agent network, you know, can really be helpful and effective in improving and increasing women's engagement with financial services?
Thank you. Yeah, absolutely. I think, you know, there are small examples and there are big examples of that. I would say, like in our own, in Sampark's own field work, which is very small, and now in Varanasi, earlier in Koppal, we found that creating youth cadres, that helps because the older women may be not literate enough or not confident enough. And even if you tell them, you know, we'll send the money to your bank account and you use your phone, even if they use the phone, they're asking the brothers or the husbands, very often brothers, because if they don't trust the husband, they ask the brothers, but they're still asking somebody else. You put the young and the more literate, slightly older women, not in their 40s and 50s, which is the age in which they are predominantly in self-help groups. But if you put the younger SHG members, like in their 20s and 30s, and you put youth cadre, and then they change the dynamics in such a good way, because the women first time start trusting somebody outside their home, showing them what, and the young youth, they tell them what to do, how to use the OTP, not to tell. So all the stuff that, happens in terms of digital literacy, young women can teach them. And we found that as a very strong thing. In terms of business correspondence, I think, like every other female-led occupation, business correspondents have fought a very long journey to a decent commission to get anywhere. So finally what happened, it started mostly with women BCs, but then over time, NBFCs became BCs because there was a need, they were struggling and in the credit business and they needed to go become BCs, and then they became BCs. So today BCs is a totally different type of business. And I think the role still for women BCs is very marginal, very limited. And even today people very proudly say, oh, she earns 1,500 or 2,000 as commission. What is 1,500 and 2,000 as commission? Women are not yet there as BCs in a good way. They are there in numbers.
I want to make a comment on this because it's something that drives me a little bit crazy. Like, there's not cadres of men out there that are going to digital literacy classes, right? There's this assumption that women have to have digital literacy training in order to get a device or use a device. No, men buy devices and then they figure out how to use them. And sometimes they figure out how to use them because they sit in the bar and their buddy tells them, right? Women sit in savings groups or women sit in other collectives. If we get women over a critical mass, they will teach each other and they will figure it out. Like, women do not need coursework in digital literacy in order to start becoming active users of devices. They need women friends who are doing cool things on their phones, and then they will start doing it.
Yes, absolutely. So since today we are talking about, access leading to empowerment, and, to my mind, at least basis the work that Crystal Foundation also has done in the area of financial inclusion space, what we have seen is that real empowerment, empowerment can be defined in many different ways. But, from a myopic angle, if you look at it, I would say empowerment also means access to capital, yeah, leading to or resulting in asset ownership and having greater agency in financial decision making and having a voice in financial decision making. So coming to the first part, that is access to capital, so that it results in enterprise, it results in owning assets in your own name. Yeah? What we see is that when it comes to credit, the conversation for women doesn't move beyond much. The self-help group and joint group lending and microfinance. What really, from a policy side, from an institution side, needs to happen, for women to start getting access to credit at affordable prices, for entrepreneurial activity, which is beyond microfinance kind of funding that they already have access to.
So, like I told you, we did a study some years ago also with Access on formal financial institutions. And we talked to about 20 formal financial institutions about how much they were lending to women and individual enterprises, and how were they looking at advancing this percentage which lay between, somewhere between 17 and 21%. Today, I think it's about 24% of bank credit going to women entrepreneurs in particular. And it's very surprising because they give the data to RBI all the time. But most of the senior officers that we spoke to didn't have a figure on their fingertips. What percentage is your bank giving of loans is your bank giving to women? They would say, oh, maybe something, yeah, okay. How? How come you don't know? And how come you're not keeping track, right? So I think even if they are reporting, what they're doing is that SHG bank linkage is incentivized because of priority sector lending, right? So you have to meet your PSL targets. Now microfinance is allowed as PSL targets. Even banks, they'll give loans to NBFCs and that gets counted. So SHGBL itself is deprioritized. Of course, we still have very impressive figures of SHG bank lending despite all that. But at the same time, individual lending is not a priority. Nobody is monitoring it. Nobody is pushing it or incentivizing it. And honestly, I mean, the dominant narrative that Mudra and other schemes are doing very well, I don't know. I think they're counting differently. Okay? So I have a slight difference from the dominant narrative on that. I think we need to be a little more serious about how to recognize women entrepreneurs, how to support them, how to reach them. And we found two things. You asked what can be done. Two things. One is at the leadership level, at the senior level of the banks. If you have more women directors, if you have more women CEOs of banks, they tend to do that. Also, I have to say, the small finance banks which have come up from NBFCs have a different approach. They have great confidence in women because they've dealt with them as NBFCs. So that institutional view. And then the field workers who are directly talking to women entrepreneurs, how they assess and look at a woman's business. That is something that makes a difference. So if you put more women or more trained, gender-sensitive male staff on the front line, those two things make a huge difference.
Thanks so much. I know I spent all my morning reading the banners as they go by, but one of the things that comes by up here as well as that you see is that 90 to 95% of all SHG members are women, and that they're getting their financial services there, and somehow we're leaving them behind there. And so there's this gap as they try to make that transition from a collective group that are receiving financing into receiving individual financing in their own names to become entrepreneurs. And so we need to think about, I think, how to get decision making as close to the women as possible as they make that transition, so that people, I think one of the big challenges is women build a financial history in their self-help groups. They build a history of saving, they build a history of borrowing, and that history doesn't translate for them as they move to more formal institutions. It doesn't translate to the bank. And so how can we move an institution closer to the women so that they see that financial history that women have, even if it isn't digitized, even if it's in informal recordings? I understand that India is moving towards cluster-level federations around savings groups. Is there something with the business correspondent model that can help move the access point for financial services closer to the cluster-level federations so that they can understand women's financial histories, they can understand their proven track records of borrowing and repaying, and then treat them as individuals and give them greater access to financial services. And so how do we think about how to move access points for financial services closer? And I think the point we were talking about earlier about kind of digital financial agents in communities, these are also people then who see women's financial activities, they see their businesses up close and have much better understanding of them and their businesses and can help make decisions about their access to finance.
We have a few questions from the audience, which I see on the screen. And while one of the questions we already answered in terms of what systemic changes that we will need to make, to improve financial inclusion of women. Um, there is this question here, which is actually talking about what is the most challenging while educating women on financial inclusion and how to tackle. And that really brings me to the conversation around financial literacy, digital literacy, and we already have touched upon the importance of having women-led cadre who can, build awareness around it. So in addition to the points that Smita, you and Lauren, you already made, one point that I would like to really talk about is um, awareness about grievance redressal system, grievance redressal mechanism. Because what I have seen oftentimes is that it's the fear of making mistakes, fear of exposing themselves to frauds that hold women back from participating fully in financial transactions, be it digital or physical. So that fear, if we help them overcome by not only telling them about how to transact and how to access various services, but how a sound grievance redressal mechanism is available for them, and they can actually resort to that. And there is commitment from the regulator about speedy redressal of all their grievances. Where can they access uh, those grievance redressal points? I think a whole lot of education around that particular conversation actually, to my mind, would go a long way in improving women's financial inclusion. So that's what I wanted to talk about. Um, so we, yeah. So there is this question, is gender inclusion shaped differently by geography? How should product design and delivery adapt to regional, social, and economic realities? So we did speak a little bit about product design and how product design can be aligned to women's reality. But this particular question about the geography, okay? So, you know, when we talk about geography, it could be different countries, India and South Asia, Africa. But apart from that, we could also look at geography as rural versus urban. You know, is it really different? For women residing in rural areas vis-a-vis women from urban areas. So, any comments from your experience, Lauren, to that?
Yeah, and I honestly think this just goes back to good business. Like, it's about understanding your client and designing a product that meets your client's needs. That client may be a rural woman, it may be an urban woman, it may be a rural man engaged in a farming activity, it may be an urban man engaged in manufacturing, right? Each client group is going to have different needs, and it is a financial institution's job, whether that's a NBFC or HSBC, to design products that meet their clients' needs. It is a product design problem. It is not a gender problem. It is understanding your clients and designing products that meet their needs.
I think geography is very, very important, not just rural urban, but according to the development of that state. So when we are looking at UP, or you're looking at the Northeast, or you're looking at West Bengal, or you're looking at Rajasthan, these are very different locations, and very different cultures operate in different communities. So I think this is a very, very nice question, not just about geography, but the previous question that one of you have asked. It's all women are not equal. When we answer a question about gender, we also have to look at how different women are different. And in the SHG bank linkage model, we first started with all poor women, then universalization came in, then it was allowed that SHGs will have 2 women from higher income levels, then income counting fell through. All this has happened, and today all women are painted with the same brush, right? So in a sense, there has been advancement, because now you're not thinking who's poor, who's rich, who's scheduled caste. You have inclusion, but at the same time, you've lost attention to excluded people, right? In a place like Varanasi, and again, I'm giving you the example of Sampark, what we did in Koppal in the north, let's say 20 years ago, with Devadasi women and so on, we thought we could replicate in Varanasi the same self-help groups, the same cooperatives, etc. And that, how naive of us to think that what we achieved in Koppal in 10 years, we will manage to do in 5 years in Varanasi. No, no, no. Those women have no time. They're still washing jeans of their husbands and sons. 19-year-old girls are washing 6 jeans every day, right? There's no questioning of the patriarchy. There's no mobility. I mean, unless and until you're sensitive to the social situation there, you cannot push in with all the digital literacy we want, with all the product differentiation we want, if we are not looking at changing culture and empowering women from within the society, and looking at domestic violence, and looking at their voice, and looking at their mobility. All that has to come along with financial empowerment. Social empowerment has to go hand in hand. And it's difficult in more patriarchal geographies.
Thank you. On the product design aspect, Lauren, I completely agree with you that it is not about rural, urban, geography, gender. It is about, consumer, who your client is and what are the client needs, and you need to design a product which aligns to the client's requirements and needs. I think that's really the answer to that. And I think so far women as a very as a category itself perhaps was not on the radar, and therefore their requirements, their needs, their constraints perhaps have got overlooked when it comes to designing, when it comes to product design. And perhaps one has to get a little more intentional about keeping these in mind. And that also answers the question somebody asked on the screen about gender intelligent banking. What would gender intelligent banking be? I mean, gender intelligent banking is really about knowing and acknowledging that women are a big part of your client base, and you really need to keep in mind their needs and requirements while designing products. So as we are coming towards the end of this panel discussion, fireside chat, what I would really like to ask both of you is, if you were to call out one particular initiative to address financial inclusion and financial empowerment of women, what would that be? Would that be in the policy space? Would that be in the product design space? Or would that be in actual last mile implementation space?
For me, it's definitely an investment in women's leadership and collectives. For me, empowering cooperatives, empowering women's collectives is way important than anything else. And also now in the previous session also there's this SIDBI promoted scheme called Prayas, which has got 23 crores right now. I mean, that needs to be 230,000 crores. It's, where are we in terms of the pilots? I remember in this conference 20 years ago talking about the importance of improving women's collectives as long as we stay with SHGBL and we do not improve cluster level financing. Women's SHGs will not be attractive for big finance from, yeah. So we need to do very big financing through women's own collectives.
I think I'm going to say two things, and I'm going to say them quickly. But at the very top level and the very bottom level. We had a panel here earlier today of MFI and NBFC. I have to use the right language. I'm in India. NBFC leaders, and they were all men. Until women are in leadership positions in the institutions that are designed to serve them, and their voices are at the table in decision making, we're not going to make the progress that we could be making. Women's voices and women's leadership is really imperative. And to counter that, meeting women where they are now is also imperative. And so bringing institutions, bringing digital touch points, bringing services as close to women's doorsteps is, I think, critical and something we all need to be figuring out how to move products and services as close to women as we can get.
I actually want to bring your attention to the gender spectrum that the UN uses, right? We start with being gender blind, and then being gender aware, and then being gender responsive, and finally being gender transformative. And the point that I want to make here is that gender blind is actually not the worst. The worst is gender discriminatory. And when we are gender blind, we risk to be gender discriminatory. So there is no choice about being gender aware and gender responsive. And today we need to step beyond that and be gender transformative. And for this, we must question all financial structures and all social structures.
Thank you very much, Lauren, Smita, for that engaging discussion. We talked about, access, channels, product design, and, finally, what are the kind of, social and cultural norms that we need to change, that we need to challenge in order to really make financial inclusion go beyond access and really result into empowerment. Thank you very much, and thank you, audience. I really hope that we've tried to accommodate your questions, as many as we could from the screen. So thanks a lot.
Thank you, esteemed speakers, for a very insightful session. Special word of thanks to the anchor, Ms. Maya Vengurlekar. Thank you, ma'am. We have small mementos for the speakers as a token of our appreciation for their time and effort. So please do collect those.